And welcome back to this portion of the Real Estate Radio Hour. I'd like to say this segment brought to us by Cambria Mortgage. Again, it's Chris and Andy.
And Cambria was nice enough to come in.
Yeah, great.
And we're going to talk about some jumbo mortgages.
Cool.
We're running into those more and more. I know we talked earlier this year that 75% of the sales were under $200,000, but we're starting to ramp those up, and there's some need for jumbo mortgages.
Well, I think a lot of people too, even those with cash, are choosing to finance because the rates are so fantastic, and it makes it more attractive. I mean, you guys, why don't you jump in there and tell the listeners what a jumbo mortgage even is, and what does it mean, and what some of the rules are?
Well, first of all, I brought with me today Alissa Csiki from our office, one of our really top-notch originators. And I primarily brought her because there's a groundswell of thought, I guess, that I be replaced. And so
never, buddy.
Apparently, Alyssa's being groomed to step in for me, which is
she's just a good-looking one in the group here.
So, well, in any event, you are correct. There is a significant amount of jumbo business in the marketplace. We get a lot of calls every day. There's a lot of confusion out there. We get a lot of questions relative to rates and to loan to values and whatnot. And I think a lot of people tried to refinance their jumbo mortgages a couple of years ago, kind of when everyone did, when rates really came down, and found some sort of shocking stuff. 2 or 3 years ago, jumbo mortgages, sort of because of the way the market went, were priced significantly above regular mortgages. If a conventional mortgage was 5%,
is that because the risk level was so tough, wasn't it?
Right. A conventional mortgage up to $417,000. So jumbo mortgage is any mortgage over $417,000. Up to $417,000, generally speaking, your mortgage is being insured by Fannie Mae or Freddie Mac. So the government is essentially taking a lot of risk from the lender. That's not the case. Anything over $417,000 is kind of a private market transaction, a portfolio transaction, or an investment type transaction. It's a non-agency loan. So yeah, the perception was that there was a lot more risk. So rates were exceedingly high, and underwriting standards were exceedingly tight. And I think a lot of people called in, as I say, to try to get their rate down. Now, obviously, when you have a large mortgage, even a small reduction in rate makes a big difference. Well, they found out, that they weren't able to get better rates necessarily, and even if they could, the loan-to-value restrictions were so tight, they just didn't have any success. And I think they kind of dropped out of the market, and I think the perception remains that there's not a lot of availability in the jumbo mortgage area, and that the rates remain high, and that's just not the case. In the last couple of years, the jumbo mortgage market has become very, very competitive. Pricing is down to the point where it is very slightly above a conforming mortgage rate. And on the ARM side, depending on the ARM term, we have 5/1 jumbo ARMs with APRs in the mid-twos.
Okay, when you say ARM, I think a lot of people think, oh my gosh, every year it's going to switch on me, but that's not the case. It's just not fixed for a certain length of time. It's a lower length of time. Now, what would that be? It's not every year, but you might have, what, Alissa? Why don't you throw that at us?
Yeah, most of the adjustable rates that are programs that we have are fixed for 5 years, 7 years, 10 years. So it's not something that you would have it adjusting every year. When you can get your rate locked in the mid-twos, for 5 years, that's quite a long time. And the savings between a 30-year interest rate versus a 5 or a 7 year fixed is pretty considerable.
Significant. And I'll tell you what, Andy, I don't know if you think this, but I mean, we always had, as we've been in this industry, and I've been in since '90, and I know you're right around me, but I've always seen, people are moving in that 5 to 7 year frame.
Yep.
I think it's going to maybe extend a little more.
Yep.
But I mean, if you get at that point, I mean, if you have a 2.5% interest rate, I mean, you can certainly pay more down towards the principal as well.
Oh, sure. But, and as the job market starts heating up again here, too, you're seeing a lot of executives moving around where they may come in for a contract of, 3 to 5 years, and those ARM products are fantastic. They can still maintain their lifestyle, come to the cities here, get a great rate, have the, the advantage of the lower mortgage interest, and, keep themselves kind of liquid in a way.
Yeah. Matt and Alissa, have you seen on the refinance part of it that it's easier to attack? And, are we still having issues with, percent down? When I think of jumbo loans, I got it more like I better have 20, 30% down, or else I'm not going to be able to get one. That's not the case either.
Yeah, definitely not. Most, the jumbos we can put, at minimum probably around 10%, which a lot of people think you have to put more than that, 30, 40% down on jumbos. And I think the big thing, too, is just to get out is that, many people think that they want to put a lot more money down in the home to get to that conventional number, that 417, thinking that there's this huge difference in the rates, when in actuality you can save your money, put more, minimum amount down, do elsewhere with your money, and still get a good interest rate.
How does that work, Matt, with mortgage insurance then? Is it higher then, or is that...
Jumbo loans, by definition, don't carry mortgage insurance. There is no mortgage insurance. So when we're talking a 90% loan to value, which is, Alissa said, we can do on a purchase or a refinance, there's no mortgage insurance. So the rates we talk about is your cost. There's no additional. There's nothing beyond that. Mortgage insurance really is under the 417. So, again, and frankly, there are lots of other strategies relative to jumbos. We have people that'll take, sort of a 10-year ARM, get a real favorable rate, use that to pay their principal down, understanding that at some point they're going to be able to do to get to that conforming loan limit.
Yeah.
There's sort of lots of strategies. I would just say that if you have a jumbo mortgage and you haven't talked to an expert lately, you would be well served to sit down with someone and just take a fresh look. And by jumbo, you don't have to currently have a mortgage over 417. We have a lot of people that might have a $350,000 first mortgage and a $150,000 second mortgage. Again, there are lots of different ways we can attack that, and maybe a jumbo mortgage, and there are lots of other solutions as well.
That's great.
We have to take a break, but you know what? Interestingly enough, we've got a couple of text messages. They want to know about Jesse's company, and that is called Foundation Systems. And I suppose if you can't remember everything,
just go to the Real Estate Radio Hour.
RealEstateRadioHour.com.
Yeah, every week, anyone who's on the show, we actually have a banner ad that goes by, and they're on there. So it's RealEstateRadioHour.com.
And again, the name of the company is Foundation Systems.
Yeah, Jesse Trebil Foundation Systems.
Jesse Trebil Foundation Systems. All right. We'll talk more real estate. If you have a question or real estate related, 651-989-9226, or send a text at 81807.